Yeah, look, the professor here is Gensler. He taught the course at MIT in 2018. What he said is the vast majority of the crypto tokens are securities. And the real fundamental first principles issue here is if you want to create a commodity, it needs to be a substance with energy content without an issuer. Okay, like a bushel of corn, a stack of lumber, a gold bar, right? Wheat, natural gas, gasoline, pork bellies. These are commodities. There's no issuer. You can create some, but there is no central group of programmers that can get up in the morning and say, we just made pork bellies non-edible. We just doubled the density of gold. We just made natural gas stop working, or we just doubled the heat content of it. You can't change the nature of the thing. And it needs to have energy. If I take any commodity and I extract all the energy content from it, I take an orange and I remove 99.95% of the energy from the orange. What do you have? You have an imaginary orange. You have a security. If I take away 99.95% of the oil in a barrel of oil, what do you have? You have an imaginary barrel of oil, right? If you want to convert a commodity to a security, take the energy out of it. Now, there's one other aspect, which is it controllable? Like, you need to not have an issuer. So the challenge with most of the cryptos is there's an issuer, there's a promoter, there's a small team, and they've got a roadmap and they're doing hard forks and they keep upgrading the roadmap. And if you have a software engineering group that keeps changing the protocol, that allows them to make material changes to the protocol. If I change from proof of work to proof of stake, I murder all the miners. All the Ethereum miners got wiped out. Billions and billions of dollars of economic damage. Did they get a say in it? No. If they didn't vote on it, why is it happening? Because the programmers control the protocol, not the miners control the protocol. Yeah. If a bunch of people could get together and vote to make all of the wheat in Asia non-edible, it wouldn't be a commodity. If I had a switch where I could change a program and make all your electricity not work in the UK, it wouldn't be a commodity. It would be a security. And I think Gensler's point is, from an ethical point of view, if one group of people get to turn off or turn on the functionality of the entire system for the rest of the world, then the investors are relying on the efforts of others. They're relying upon the group that controls the protocol. And if you're going to actually be able to turn off or crank up the staking yield to 10% or crank it to 0 or lock somebody up for a decade or give half the people, what if I just give myself all the tokens and I give you none of the tokens? Right? I make yours not spendable and mine spendable. If you have that kind of power, you're running a company, it's a security. If you're going to sell it to the public, you have to make a full disclosure about who has the power, and you have to make continuing disclosures. That's what a public company does. Google does it, Apple does it, MicroStrategy does it, Microsoft does it. You're running a company, and if I had intention to give myself all the shares of stock for the next 100 years, I'd have to tell you I just did it, right? And if I did do it and didn't tell you, right, there's the issue. So the obligations of disclosure for security are orders of magnitude higher than for a commodity. So coming back to this issue of crypto, the idea of Bitcoin was, how do I create a protocol that's fair and equitable that I give as a gift to the world that no one can control? If you're going to do it and you understand thermodynamics, and if you have any sense of genetics or biology or physics, you realize you need to be very humble in your aspirations. Like Satoshi's monetary protocol, it was set in stone. It was January 3rd, 2009. They released it. It circulated till Pizza Day for 500 days without any value, right? They fixed a couple of bugs, but they never changed the 21 million. They never changed the block rewards. They never changed the monetary protocol. Materially, it's the same protocol, unchanged, and it's never a hard fork. All the changes were soft forks. The whole idea is, I have a protocol, it's a genetic code, I'm releasing it. How long do you expect that protocol to exist? How about like 100,000 years? How about 1,000,000 years, right? The idea of the protocol was to go forever, right? Between now and 2140, you release block rewards, and after 2140, the network runs on transaction fees. And the intention was, this is going to exist to create a shared immutable ledger of 21 million coins, subdividable to 2.1 quadrillion Satoshis. That was the idea, no other idea. It'll be protected by the generation of SHA-256 hashing encrypted energy. Right? And that's what makes it a digital commodity, the fact that it uses physics, hardware, and energy. And if you had a software development team and they had the power to change it to something different and keep changing it, we're going to change the block rewards every year. We're going to turn off the mining. We're going to convert to this protocol, that protocol. We're going to lock up those coins. The problem is you now have an issuer. And if you have an issuer, you have a software engineering team. It's a software company. And it's not unethical to create a software company. It's unethical to sell the equity of a software company to the general public without full and fair disclosure. So the failing is, you've created a company and you intend to keep changing the software continually, and it's a small group of people that get together to do it, and they do it to the detriment of somebody else. There's a winner and there's a loser. The losers in the Ethereum merge are the miners who lost everything, and the winners are the stakers and the people that can control it. And then you've got the general public that have money locked up in the staking contract, but they can't get it out. So when are you going to get out your staked ETH? 10% of the ETH is staked, it's locked. When are you going to get it out? Nobody knows. Who controls that? The software engineers control it. What is that? That's like a small group of people, right, are controlling the entire network. That's the definition of an investment contract. When you have the general public and making an investment of money dependent upon the efforts of others. And so I think elephant in the room with the crypto world is, most of the cryptos are attempting to do very intricate things. They want to move fast and break things, and they want sizzling functionality and performance. I want to do DeFi contracts and the like. And yeah, those are all sexy and fun and fine. But if you're doing them in a decentralized fashion, you have to release a singular protocol and give it to 100,000 different groups, and then they all have to run the software and you can't change it anymore.